Good morning from London and welcome to the launch of the 8th Global Green Finance Index, the world's most authoritative assessment of the performance of financial centres in the delivery of green finance. I'm Simon Mills, the Senior Consultant at Zien, and I'm going to be guiding you through today's proceedings. The agenda for today is actually quite straightforward. In a moment, I'm going to hand you over to Mike Wardle, who's the Head of Indices at Zien, who's going to take you through the results of GGFI 8. I'll then briefly touch on a couple of the aspects of the index which we found particularly notable before we open the floor to your questions. Please use the question tool to the right-hand side of your screens to post questions to us. We're going to be collating them as we're speaking. We hope to answer as many as possible before we draw this morning's webinar to a close. Now, apologies in advance if we don't get through them all in our allotted time. If we miss you out or you've got something you'd like to ask us in confidence, please email afterwards. Our contact details are on the Long Finance website. Finally, we're going to be recording this webinar and are going to post the presentation on our website. So please do feel free to revisit it or share it with your friends. Now, time is pressing, so without further ado, I will hand over to Mike, who's going to take you through the results.
Well, good morning from London. I'm Mike Wardle, a Director and Head of Indices at Zien. I take the lead on the Global Green Finance Index and also our other indices, the Global Financial Centres Index and the Smart Centres Index. And I'm very glad to be sharing the platform with Simon today. Simon and I first met actually when we were thinking about starting off the Global Green Finance Index. So it's very much a joint development between us and very good to be sharing the presentation with Simon today. And we've been tracking the development of green financial centres, green finance in world financial centres now through 8 editions of the index. The first edition had 47 centres that we managed to rate for their green finance. GGFI 8 includes now 80 centres, and this shows, I think, the development of green finance across the world in terms of the number of financial centres who are taking it seriously and are enabling green finance in their jurisdiction. And indeed, the aims of the GGFI are to encourage development and enhancement of green finance across the world, to showcase best practice and to foster a race to the top. We do think this is an area which needs urgent attention, and it's great to see financial centres taking it seriously. A couple of definitions, first of all. The first one is on the definition of what is a financial centre. And UNEP defined financial centres as cities with an intense concentration of financial activity involving an interlocking set of financial sectors and transactions. We're looking at this quite carefully because, of course, the future of a city has, in terms of a commercial centre, is shifting, particularly as the events of the last year during the pandemic have meant people embracing digital communication. And so depending on your location and where you are in the world, depending on the particular way in which things are developing, financial centres may start to evolve into something different, but we'll be keeping an eye on how that develops. And green finance essentially is any financial instrument or financial activity which results in positive change for the environment and society. And this really contributes, anything that contributes to reducing the emission of greenhouse gases definitely falls within the category of green finance. The GGFI is a factor assessment index. That means it takes account of 2 sets of data. And the first of those is the instrumental factors. These are quantitative measures drawn from a whole range of places, from the World Health Organization, from the World Bank, and a load of other places. And these are quantitative measures that attach either to a city or to a country, which feed into the model. The second set of data is survey responses. We run the GGFI survey continuously, and we ask people working in financial services to rate financial centres that they know about, for the depth and quality of their green finance. And we use a machine learning algorithm to look for relationships between the assessments and the instrumental factors and combine them into a single rating. So that's a little bit about the methodology we use. Looking at respondents to the GGFI survey, the first thing's analysis is respondents by industry sector. And you'll see that actually we have a very good spread of people working in financial services who respond to the GGFI questionnaire. And respondents by region, we do have world coverage, but you'll see that the two areas where we receive most responses to the survey are from Asia Pacific and from Western Europe, with about 40% coming from Asia Pacific. But I think the message here is please spread the word if you can, to encourage people to respond to the survey. Turning to the headlines from GGFI 8. First of all, London has overtaken Amsterdam to take first place in GGFI 8. Amsterdam moves to second place, with San Francisco overtaking Zurich to take third place. And Western European centres continue to dominate the top of the index, as they have done since GGFI 1, taking 8 of the top 10 places, with the Californian centres taking the other 2 spots. But we think it's significant that New York has gained 18 places in the rankings to move up to 13th place, the biggest rise across the index in this edition, and maybe shows, and certainly we know that New York has been pushing on green finance and has been taking action to encourage and develop green finance in the centre. Asia Pacific centres again also performed strongly. Beijing, Shanghai, Seoul and Singapore all consolidated gains they've made previously. And really the underlying trend here is the competitive challenge to Western European centres is real. North American and Asia Pacific centres are focusing more intensely on green finance, and they are challenging in terms of what we've seen before, which has been domination by Western Europe. So this table shows the top 20 centres in GGFI 8. As I mentioned, London, Amsterdam, San Francisco taking the top 3 positions. Luxembourg moving up a place within the top 10. Geneva moving up a place. So there's some movement, but relatively stable in the top 10. A little bit more movement in the places from 11th to 20th. And as you'll see there, New York in particular stands out in terms of its rating and its rank rise. We also, of course, track the different dimensions, depth and quality within the index. And looking at these underlying dimensions, several centres see a marked difference in their ranking for depth and quality. Looking, for example, at centres such as Zurich, Oslo, Singapore, they rank significantly higher for the quality of their green finance than the depth. In other words, they're doing very good work, but perhaps it hasn't yet permeated the financial system in those centres to the extent that we might want to see. For others, the reverse is true. For example, Washington and Seoul, which were seen to be having a greater depth of green finance, but where the quality measure ranks them slightly lower. And we can track this graphically. This shows the relationship between the rankings of depth and quality for each of the centres in the index. Those centres that are below the line are scoring higher for quality than for depth. Those scoring above the line are scoring higher for depth than quality. And so a useful guide for financial centres to work out which side of the line they fall, and therefore whether where they need to put their effort in terms of continued development. We categorise the quantitative measures in the index, the instrumental factors, into 4 areas of competitiveness for instrumental factor groups, covering sustainability, business, human capital and infrastructure. We then run the index model using only the quantitative measures belonging to each of those groups. And this gives an indication of the breadth of strengths in centres. It's really marked that London comes top on each of these measures, which really shows why in GGFI 8 it's coming top of the list. Other centres are dotted around the list in ways, but it does give an indication again to financial centres as where their strengths or relative strengths lie in relation to various aspects of green finance. But we also run the index by industry sector, which means we take only the questionnaire responses from people working in each industry sector, and again run them through the model, combining them with the quantitative measures. And this is quite interesting. For example, we can see on this score that Beijing takes leading place in two of the industry sectors, and London on trading actually only ranks 20th. So people working in trading are rating London's green finance much lower than some others working in other sectors. And this is an interesting way of tracking where people's strengths are and where their reputation is rising and falling. A key issue is the extent of competition in the index. This is a chart just showing the ratings of the leading centres over time. And the range of ratings in the top 5 has narrowed quite sharply over time. This is true across the whole index. We find really tight competition, both at the top and indeed in the middle ranks of the index. And we're seeing that tighten over time. So I think that what this shows is that people are really taking the development of green finance very seriously, and they are pushing forward across the world. Just looking at regional analysis, in Western Europe, first of all, we welcome Berlin as a new entrant to the index. Western Europe continues to dominate the top of the index. As I've mentioned, other regions are pushing hard. Looking at Asia Pacific, almost all of the centres in this group, the top of the Asia Pacific list, improved their ratings in the index. Beijing and Shanghai take the lead in the region and are pushing against the top 10. So we shall continue to watch carefully the development of green finance in those centres and in China and Asia Pacific more generally. I've already spoken about North America in terms of the Californian centres performing very strongly into the top 10 and New York's position. But just to say that on the whole, North American centres are rising in the ratings. So again, an indication that the index is becoming much more competitive, that North American centres are pushing up against Western European centres in terms of their green finance ratings. Turning to Eastern Europe and Central Asia, Nur Sultan continues to lead the region, moving up 5 ranking places. Other centres in the region had more mixed fortunes, but they continue to develop, and Moscow and Istanbul have moved up in the ratings and rankings. In Latin America and the Caribbean, slightly lagging behind in terms of the overall ranking in the Green Finance Index. Sao Paulo continues to take the top spot, and Mexico City has moved up 5 ranking places in this edition of the index. So good work there. Looking at Middle East and African centres, Nairobi joins the index for the first time, and it's good to see more African centres joining the index. In this edition, Dubai has overtaken Casablanca by a narrow margin, and Abu Dhabi and Bahrain also rise in the rankings. So again, we're seeing good performance from Middle East and African leading centres, but also competition to be the best in the region. So what conclusions can we draw from the results? First of all, green finance continues to grow. I've used the word popularity, but it continues to develop. Ratings of green finance rose in nearly all centres for both depth and quality, which shows that people are rating centres in the survey more highly as time goes on. The second is that policy matters. not just through its direct effect on green finance. We can see from the data that where a city is showing leadership on infrastructure, on clean air, public transport, livability, is putting its strength behind sustainability in general, this has an impact on its green finance offering. Third, there's no room for complacency. Asia Pacific and North American centres are improving rapidly in terms of the quality and the depth of their green finance, and Western European centres at the top of the index are under pressure from that competition. And I'm going to just leave that there and move on to some commentary from Simon on some of the other interesting issues that come out of the index.
Thank you very much, Mike. So what's caught our eye during the compilation of GGFI 8? Well, on the eve of COP26, we did note that London's rankings saw a boost from its high point at #1 in the first couple of indices. London actually saw a dip in its fortunes. And we were very curious as to whether this sudden boost was engendered by the buzz around COP26 or whether it was a more solid foundation. Now, as Mike has already mentioned, GGFI 8 is a composite index which is compiled using 4,847 centre assessments with quantitative data from 143 sources. The respondents to our questionnaire include policymakers, academics, regulators, NGOs, and financial services professionals. When we ran an analysis just using the responses from the financial services professionals working directly in green finance, something very interesting emerged. Not only did London retain its #1 slot, which I suppose disproves any dead cat bounce hypothesis, but there was also a significant reordering in the top 10. We saw Paris move from 10th to #3, and New York moved from 13th to #6. So the people who are actually at the sharp end of green finance are seeing real progress in these centres in the delivery of green finance products and services. Moving on to the areas of green finance that interested our respondents, as expected, green bonds and sustainable infrastructure finance tops the polls. But interestingly, we also saw an increase in the interest in green insurance. And perhaps this is a reflection of the leadership role that insurers have to play in the fight against catastrophic climate change. Moving on to what our respondents considered as the drivers of green finance, as you'd expect, the leaders were climate change and regulatory frameworks, but very close on their heels was academic research. Now, having worked in the field of green finance for over 20 years, I find this fascinating because it has taken a while for academia to actually catch up with the leading edge of the green finance community. But I hope that with the support of both academics and practitioners, policymakers will be able to devise more effective frameworks that continue to support the growth of the sector. Incidentally, for any academics in our audience, please do have a look at the London Accord, which is the world's largest collection of free-to-access ESG reports. Have a look at the Long Finance website for further details. Now, over the last 8 editions of the GGFI, we have seen explosive growth in interest in green finance amongst the world's financial centres. At a webclave for financial centres that we held earlier this year, participants showed an understanding of the critical role that financial centres have, both in the delivery of the UN Sustainable Development Goals and in driving low carbon green growth in the wake of the COVID-19 pandemic. Through local action, disclosure and reporting requirements, and the establishment of nurseries for the delivery of inclusive digital finance, financial centres have actually got the capacity to deliver the goods and services humanity needs if it's to meet the challenges of the 21st century. none of which is more pressing than climate change. And this is why the supplement in GGFI 8 is actually dedicated to COP26 and the very thorny issue of putting a price on carbon. Now, there are many, many challenges to overcome if COP26 is to reach a successful conclusion. But it's absolutely certain that international carbon trading and, of course, financial centres have got a crucial role to play. The summit is yet to start, but the world's hopes are pinned on a successful conclusion, and our thoughts are very much with the world's leaders as they attempt to reach an effective and equitable agreement. And so, ladies and gentlemen, we now have time to answer your questions. We've got a few questions here. I think, Mike, this is one for you. What advice would you give a centre at the bottom half of the index who wanted to increase their ranking?
Okay, so there's two things really to look at. The first one is whether you are successfully building an infrastructure or an ecosystem in your centre which encourages the development of green finance. And have you got the right skills in place? Have you got the right regulatory system which both allows and indeed promotes innovation in the centre? Are you an attractive place for people to want to come and do business and to work? We always say you can't be an international centre without international people, whether they are coming to work in your centre or whether they are visiting, but you need to build that arrangement. The second would be to make sure that you are open to business, so to ensure that as a financial centre, people operating internationally are able to do business in your centre easily, that you have an open economy in terms of the ability to trade and to conduct business. The third one is to make sure you are telling people about what you're doing. Marketing is not simply a matter of trying to improve your reputation. It's actually ensuring that people know about developments in your area of the world, so that they know there is an option to come to you where they have a business issue or problem or something that they want to resolve, and they will get the support they need. So think about the ecosystem, be open to an international audience, and make sure you are telling people about developments in your city. Because what we find often that people who haven't recently done business in a jurisdiction, think about what it was like 10 years ago, rather than understanding what has happened in terms of development of the financial system in more recent times.
Now we've got an interesting question here, Mike, which is about the development of specific regulation over green finance products. When should we actually expect to see regulation which is specifically focused on green finance? Now, as you're aware, we have got the European regulations which are coming in regarding nomenclature in green finance. The UK, I believe, is going to develop its own system. I'm not sure there's anything coming out of the US at the moment, but perhaps our audience can enlighten me. How important do you think regulation is for green finance? Does green finance even need separate regulation? Surely it's just a financial product like any other. What are your opinions, Mike?
Well, so far there is a difference between green finance and other forms of finance, in that it does seem that it needs regulatory action, government action, to get things started, to get things moving in green finance. And different jurisdictions are moving at different speeds, but whether it's in Nur Sultan with its own green finance institute, whether it is in China with the development of taxonomies and this year's emissions trading scheme, government needs to take some action to stimulate green finance in the market. And so this does make green finance a little bit different from general finance. My vision, I guess, is that in 20 years' time we will stop talking about the distinction between green finance and mainstream finance, because green finance will be pretty much the only show in town. But until that point comes, I think we are reliant on government agencies, both internationally and within national jurisdictions, putting in place frameworks, whether they are recommendations or whether they're regulation, to improve and force the development of green finance. And one of the things that's been really had a real impact, I guess, is the whole question of disclosure. And mandatory disclosure by companies has made a difference in terms of people's investments decisions, and allowed people to choose how they invest, to make sure that they're having a sustainable impact. And it's those kind of regulatory systems which allow for the markets to work effectively, because the information is flowing, that I think we'll see more of.
Absolutely, and of course, green finance is a relatively young sector, and it's extremely important that the reputation of the sector remains intact. And certainly one of the things that taxonomy and reporting can do is actually prevent any accusations of greenwashing. I think slapping a coat of green paint on a brown product, something which actually supports fossil fuels or damaging environmental activity, would be immensely damaging for trust, and without trust markets can't operate. So avoiding greenwashing is very important, and I think that taxonomies are an extremely effective way of addressing this. The other aspect of regulation that I think is important is actually going to come out of COP26. We are in desperate need of putting a price on carbon and actually linking up some of the carbon trading schemes which are springing up around the world. It's not an easy task. Certainly the Chinese system is slightly different from the EU ETS. Linking those two schemes presents a quite significant challenge, and may require some movement by politicians on both sides of the equation. But regulation is incredibly important, I think.
Yeah, I see that Adrian Jeremiah has asked specifically about greenwashing, and I think there is a debate about the whole question of ESG and how far the E in ESG, the environmental impact, has really taken precedence. If I'm being really polemical, I would ask that whether a bank trumpeting its carbon-friendly operating because it's running paperless offices and it's no longer using up forests and so on, but at the same time as enabling investment in a coal mine, is actually a good, but actually because it's touching the right buttons, might get a good score on some of the ESG metrics that we see, because its governance systems are good and its social impact statements are all there. So I think we do need to continue to be really skillful in understanding ESG analytics. It's why it is such an important area, but to make sure that the things that we're analysing and scoring within ESG are those which actually do lead to carbon reduction.
Absolutely. Having worked in the field for a while, I think that it's important not to lose sight of why the initial interest in ESG was sparked. It's not just about covering everything with greenwash. The whole purpose of ESG is actually to create competitive advantage. If you can accurately assess risk, if you can accurately identify where there are opportunities, then you can price products appropriately or find arbitrage advantage. So don't lose sight of the fact that people are doing ESG not just to appear green, but also to actually make a profit.
And indeed, there is some evidence that profits and return on ESG related products are higher than on non-ESG related products. Some of that will be to do with the fact that you've done a lot of analysis and a lot of thought as to where to put your money because you've been through the ESG analytic process. And that is all to the good. And a good ESG analyst will understand very well how strong the various elements of E, S, and G are in relation to a company or an investment, and that's exactly what we're looking for.
Absolutely. And 20 years ago, the ESG analysts were, the rather odd guys in the porter cabin in the car park. I think those days have gone. ESG is part of the skill set of mainstream analysts nowadays. It isn't a separate discipline. It is very much put at the heart of investment analytics. Right, I've got another one here, which is what's driving the growth of green finance in the Asia Pacific region?
Yeah, and I think it is sort of the same as in many other parts of the world, in that governments are taking the issue of climate change seriously, and more seriously over time. And China's announcement last year of moving to net zero by 2060, when talking to people in China, it is taken very seriously indeed. China's also influencing what happens elsewhere through its Belt and Road Initiative. It has a green and sustainability stream. So when it is investing in other countries in terms of the Belt and Road Initiative, it is looking for sustainable infrastructure development there as well. China, of course, is complex because it's continued reliance on coal, and COP26 will see whether some of that commitment shifts further. But certainly in terms of the underpinning of the economy in China, there are good signs that they are taking seriously the need to move away from fossil fuels. Someone told me recently that apparently they were installing 20,000 electric car charging points in China a week, and the investment in electric vehicle technology is certainly strong. Now, in other parts of Asia Pacific, equally, whether it is in Tokyo or Seoul or Singapore, the impact of climate change is starting to be seen, and governments are taking seriously the need to improve the financial system in terms of its ability to invest in green. For example, to take an example of Korea and Busan. Busan obviously is one of the world's major ports. It's the 5th largest container port in the world, but it's also a major hub for shipbuilding. And they are very seriously into the whole question of how to build more sustainable shipping, because they understand that, that shipping emissions are a major issue, and they need to move away from burning very dirty diesel to other forms of fuel. And the financing for that type of research and development, and the financing for that sort of investment, in a long-term investment in shipping, is coming through maritime finance institutions in Busan, and driven by a government that is very keen to continue to drive that kind of environmental change. So I think it is the same as in other parts of the world, with governments waking up to the urgency of climate change, and putting in place regulatory systems or encouragement to the financial sector to underpin the drive towards reducing emissions.
Absolutely, and this is certainly something that financial centres should take note of, because some of them are quite highly exposed to fossil fuel in investment, and certainly in terms of stranded assets. If we do have a satisfactory resolution to COP26, we are going to see a tailing down and a cut-off point for fossil fuels over the next 20, 30, 50 years. So financial centres need to be aware of how exposed they are to risk from this particular sector. Now, I think we've got time for one final question, Mike, which is what can Europe do to retain its dominance in the index?
Do more of what it's been doing, and do it tougher, if you like. It is true that Western Europe is doing well on green finance. That's partly because the EU took a lead a while ago, partly because the central banks have been working together across Europe for some years now, partly because the skills in green finance have resided here, because in Western Europe we've been looking at these questions quite seriously for some time. In order to stay ahead, then it's going to be innovation. It's going to be moving deeper into the market. So anything that is in the financial sector, if you can't yet call it green, there's an opportunity to deepen the role of green finance. And some centres have been really good at certain things. If you look at Luxembourg, the green bond market and the development of the green bond market in the stock exchange, Amsterdam, green lending has been a real driver. And so it is looking for new and innovative ways to build green into the whole of finance. And it's important that people look both at ordinary banking, if you like, but also wholesale. So whether you're working in retail or wholesale, are your products actually delivering green outcomes? The second thing that I think that Western European centres could do, and governments could do, is to take really seriously ideas around how to use the issuing of debt to drive green development. So whether it is sovereign green bonds, as we saw the UK issued its first sovereign green bond earlier this year, whether it is performance-related bonds, which actually give a different rate of return depending on whether you meet your climate targets. There's all sorts of innovative and interesting ways in which the financial sector could develop, and Western European centres need to stay on or ahead of that curve to make sure that they continue to lead the way in green finance. And all the signs are good, but there is going to be increased pressure from other parts of the world.
Absolutely. I'd also say that I think that European dominance is historic. Green finance was essentially developed within European centres, so they've had a head start. But I do believe the rest of the world is catching up very rapidly, and Europe can't rest on its laurels. It needs to keep innovating. It needs to ensure that the regulatory system is one of the best in the world. Otherwise, other people are going to eat our lunch. I think, Mike, that it is time for us to draw things to a close. Thank you very much for your attention, everybody. Sadly, we've reached the end of this morning's event. The next edition of the GGFI is going to be produced in April 2022. Now, don't forget, your views count in the production of this report. Please do take part in our online survey, and please ask your colleagues to fill the survey out as well. As I mentioned at the start of this recording, at the start of this presentation, this event has been recorded, and you'll be able to access it on our website, where you'll also find all the previous editions of the GGFI to download. Mike, have you got any final words?
No, I need to thank you, Simon, for chairing the event this morning, to thank everyone who's attended and for your questions, and do keep involved in the work of the GGFI.
That's wonderful. Thank you once again, and it's goodbye from London.
Goodbye.